Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 14th of December, comes to you from London. And we had inflation numbers out in the US yesterday, and inflation numbers out in the UK today, and inflation's falling. And I did do quite a few posts on LinkedIn yesterday about inflation, and quite a few people have come back to me saying, how are you doing these charts? So the first thing is I posted another one this morning where I took the inflation numbers. This, by the way, I can show you how to do this because a few people have asked, so I can just clear that off, and I go and just select the overlay. And because I have lots of different feeds configured in Updata, you can configure to lots of different data sources, and I just import this data from a spreadsheet, and I just allow the time shift, and so literally I can now just click on the chart here and pull away that inflation chart there, and in fact I coloured that red. All very easy to do, and then I just posted the chart directly to LinkedIn, which you can actually do from the chart as well. So that's quite interesting how that's really matching, and so we are seeing this inflation falling back, but of course the big question is, like the 1970s, will we see a peak that goes even higher, and are we set for several years of tricky inflation numbers? I was also asked about the dollar and how that relates, and again you can just go and I can select my icon, select the dollar index. I can overlay data from any chart, and in this instance, in fact what I want to do there is just undo that, and from this instance I can actually just what I forgot to do there was just fit to window. So we can just fit to the window, and we see how that spike in inflation was followed literally a good few years later by a big fall in the dollar. So maybe we'll see something similar. It's just interesting to see that, and people have said to me, so what's the methodology here? Well, the simple thing is basically that inflation goes down. That means the Federal Reserve feels less need to raise rates in the short term, which means that the dollar falls on the carry trade because the return on dollars is going to be less because the Fed funds rate is not going to go any higher, and there was an expectation that maybe it would. So that's why, and I was asked to clarify that, and I do get quite a few requests from time to time to do that. Another chart that I did quite like was the Chinese data, and this actually comes from Our World and Data. You can just configure that in Updata, and all that data that is on Our World and Data is there to overlay, and of course you could overlay market data and all sorts of things, and you just configure that in your data services menu. So literally there's dozens of different data services that you can run Updata on, including Bloomberg, Icon, Trayport. There's just lots of different services, but Our World and Data is a free one. Yahoo's another free one. There's lots of services that you can just connect straight into Updata out of the box, and that then allows you to look at different data sets. Anyway, a look at markets, and what have we got going on here? And again, another question I was asked yesterday, and if you want to post a question, just do it in the comments on any of my posts on LinkedIn. That's the easiest place for me to answer. I get dozens and literally dozens of messages a day on LinkedIn, and it's hard to see the real messages for all the junks of people trying to sell me something. So basically, with 25,000 followers, you tend to get just a lot more of that sort of junk. But if people, you want to know what's going on, you want to ask me a question, just do it in the comments, and I'll do my best to answer it, either in the next charts today or in the video. And I had another question on YouTube: what's your methodology for the cloud charts? What's the blue line? And really the key thing is you need the cloud charts book, and that really explains the whole methodology, and people ask me to put a whole book into 20 seconds in a video, but basically the lagging line is the price shifted back 26 bars, and the reasons for that are all explained in the book, or if you've done our training courses, we explain cloud charts quite clearly. And of course I teach this, the Ichimoku course for the Society of Technical Analysts in the UK. So and I've given lots of presentations on Ichimoku. So if you haven't worked out what it is by now, you've clearly not been following me. But the lagging line is the confirming line. So the price goes below the cloud, that's bearish. The lagging line is the confirming signal, and that's really what we're looking for. So looking at the markets now, we've got the dollar index. It's below the cloud on the medium term and has been really ever since we fell through that sort of 108 level. 110 was really critical, and that's when we heralded the end of the run in the dollar. We've got these downside targets on the point and figure chart. This is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market. Really important that you have those multiple views with the corresponding point and figure target. So I've got 6 charts, and I can go right through the list. I look at hundreds of charts every day. I've spent my life looking at millions of charts because that's how many charts I look at a day. And so we see here the dollar weakness is just showing through on all the charts. The dollar yen yesterday just fell really heavily on those inflation numbers based on the expectation that the Federal Reserve would now hold steady on rates. And we see because inflation is falling, they feel they don't need to do any more. Of course, looking at that long-term chart of what happened in the 70s, maybe there'll come a time when they do. But for now, we're seeing inflation falling back. And that's the understanding of time horizon. The very long-term outlook for inflation is still not great. And so looking here at the sterling, we rallied on that move. UK numbers out this morning haven't really done very much, so that's quite key there. Bitcoin is sitting in the high 1700, so it has recovered a little bit, so that's quite key. And just looking down the markets, so we saw the S&P up 0.75% yesterday, and the Nasdaq also similarly up. And we're looking at the futures today, very flat. Market is going to do nothing, so just opening flat based on the futures. FTSE is down. The FTSE future is down 0.25, still knocking on the door, trying to make a new high. Maybe in 2023 we'll see that. We get a new thrust on that column there. That will be pretty significant. And we're seeing in Europe the DAX down 0.5%. So again, just hitting the buffers on the long-term chart, hitting resistance there on the lagging line and on the price. So that's quite key. Asian markets looking stronger. Japan was actually up 0.2%. And Hong Kong was up, and China flat with all those COVID cases, because it'll be very interesting to see what happens in China. And the Indian market up 0.25%, still looking strong, and the Aussie market up 0.2%, so also looking pretty strong there. If we look at some of it, we'll look at the energy mix in a minute. Gold has settled back to 1805, so we're seeing that's a move back, but we're still holding that $1,800 level. Silver looking very, very strong indeed. Relative to gold is actually improving. We've been calling that higher for a while. And US 10-year yield sitting steady at 3.5%, so that's quite key as well. And the 30-year yield sitting at 3.56%. So really that fallback in yields, no big changes on those numbers yesterday. A quick look at the energy mix now, and we look at, we just get rid of these charts out of the way. We've got Brent crude powering ahead. We've been bullish the last couple of days on Brent crude. We are medium term bearish, short term bullish. It's understanding those time frames, and we put the report out in the morning call out to clients this morning, again saying bullish for Brent crude. We've got these upside targets on the 1 minute chart, the same yesterday, so no real change there. Looking at coal, sitting at 232, just falling back through that 250 level. We've got some downside targets there for coal, so those need watching. Emissions down 4%, so really interesting there that we've seen this failed pattern. That's really significant. We started to see the downside targets there, and this is interesting. This has happened since this morning, so we're seeing carbon prices falling. That pattern just wasn't able to hold up. That's a failed breakout, and we're falling through the trend there. So that's really, really quite key. And we're seeing gas prices off 5%. Really hard to believe with all the cold weather that we've been seeing in Europe that gas prices are actually falling. TTF down 5%, NBP similarly down 5%, and we went out as bearish on gas this morning to clients because we had the downside targets, and that's where we were heading. So really quite interesting. They're seeing a floor of around 320 for NBP, and on TTF we're seeing that floor at around 130. So that's really quite key. We're actually just through that at the moment. 125 is probably the level that we need to watch. Now looking at German power, of course, we've only got really a couple of weeks left on the Cal 23 contract, so we are seeing a fall away there, but all eyes to Cal 24. That is down this morning some 6%. We did make a higher high. We did nudge higher. The key thing is, will we make a lower low? And looking at the levels there, 227, 290, that's the trading range. If we break higher than that 290 level, 300 let's say, then we will see power starting to rise. It's really quite interesting. interesting. And looking at Nordic Power, we were out this morning again on that as bearish, and we're seeing the quarterly contract looking more bearish there as well, just falling away, targets met, so quite key, and there's the trading range there. That's it for today. Until tomorrow, happy charting. Remember to leave me comments. Bye for now. See you then.